depreciation conventions. So, again, we have a division between real property and personal property. Okay? Because I didn't need to erase that. Real and personal. So, half-year convention, mid-quarter convention, mid-month convention. First off, let me just say, real property is always going to use the mid-month convention. And that's all, mid-month. Personal property is going to use either the half-year or the mid-quarter. So you'll see these abbreviated as well, MM, HY, MQ. Okay, so let's start with the easy one. I don't think they start with the easy one here, but I think it's best to start with the easy one. Yeah. I'm gonna start with the mid-month convention because I said that's the easiest one. It only pertains to real property, so something that's going to be depreciated over 27 and a half years or 39 years. Again, not land, but buildings. So the mid-month convention, it treats all property placed in service during any month as though it was placed in service at the midpoint of that month. So you bought a piece of property on January 1st, you bought a building on January 1st, you're going to start depreciating it as of January 15th. You bought it July 17th, you're going to start depreciating it as of July 15th. It's always going to be on the 15th of the month. We start in the middle. That applies to the year that it was purchased and the year in which it's sold. So for the year that it's sold, every intervening year, you're going to depreciate it for 12 months, the full year's amount. In the year that it's sold, you are going to treat it as though it was sold in the middle of the month in which it was sold. So if it was sold August 1st, you're going to depreciate it through August 15th. Sold December 31st, you're going to depreciate it through December 15th. Okay, so in the year it was purchased and the year it's sold, we're going to use these conventions. All of the intervening years, we're going to depreciate for all 12 months. Lucky for us, the book and the IRS, they've got tables for us that we can use to determine how much we depreciate, what that percentage is that we're going to need to use. And we'll go through some of those calculations. Okay, again, mid-month, only for real property. Personal property doesn't use it. So, like I said, this is only going to be for 27 and a half or 39-year property. Land, well, land, we're gonna put it on the books when we bought it, but again, we're not depreciating it, so we're gonna put it in the system when we bought it, the software system, but we're not depreciating it, so that starting point and ending point don't really matter for purposes of land. Okay, so questions about this? Yeah.
So if you purchase land, building hand in the month, like 30, March 30 or March 27.
Yeah, then you just put it in, because it's not gonna, the whole reason we're doing this is for depreciation purposes. Right, so you're gonna put it in the software on the date that you purchased it, that's fine. The software is not gonna depreciate it. Or if you're doing it manually, you're not gonna depreciate it, right? So it doesn't really matter. Land is gonna stay on both the financial statements and the tax records at whatever you purchased it for.
I'm talking for the date. If you buy for 27, you want to use next month?
So if we're using if it's land?
No.
Or if it's not land?
No.
Okay, so you buy it on the 27th? No, you use the current month. So whatever month you bought it in. So yeah, you may start depreciating it before you even owned it.
Oh, okay.
Okay? And the same thing with selling it. You may keep depreciating it after you actually disposed of it. Because if you disposed of it on the 1st of the month, you're going to depreciate it through the middle of the month. Okay? So, other questions? a good question though. I know, it's kind of weird, isn't it? Because it's like, wait, I didn't even own it and I get to depreciate it? Cool. Okay. Any other questions about the mid-month convention? Okay, so let's move on then to these other two conventions, the half-year convention and the mid-quarter convention. You can, and we already talked about kind of what they mean, but you can tell even by the name, it gives you a hint as to what they're talking about here, when it starts. Half-year convention. This one is used the most often. You start depreciating it on July 1st. Doesn't matter when you purchased it during the year. And this is always going to be the default convention that is used for personal property. We will at times use the mid-quarter convention, but that is only under certain circumstances. So the default convention for personal property would be this half-year convention. So for example, what they've got here, so Cal purchased the following assets during the tax year for his sole proprietorship: equipment, which is gonna have a 7-year depreciation life, a truck, which is gonna have a 5-year depreciation life, and then other equipment, which is gonna also have a 7-year life. So he purchased it throughout the year, 3 different dates, but he's going to start depreciating all of those items as of July 1st. All of them. So the equipment, both pieces of equipment will start July 1st. The truck will start July 1st. Okay? Oh, I didn't mention what life they are. Okay? So that's our default. However, there are certain times when we cannot use the half-year convention. We have to use what's called the mid-quarter convention. Again, this is only for personal property. We use the mid-quarter convention when we place more than 40% of our personal property in service during the last 3 months of the tax year. So, the concept behind this is, well, let me back up first and just kind of give you an example. So, for example, in this example here, this was throughout the entire year. If this truck had been purchased October 1st, October 1st is during the last quarter of the year. That truck was $20,000. The proportion of assets that we placed in service, so $7,400 plus $20,000 plus $2,000, 9. So total assets placed in service was $29,400. If this was placed in service October 1st, this would mean that $22,000 was placed in service in the last quarter. So $22,000 divided by our full amount, $29,400. I don't know what percentage that is, but it's certainly greater than 40%. That means that more than 40% of our personal property, we're not going to include real property, only personal property. It has to do with the value of the property, not the number of items. It just has to do with the value of the property placed in service. In this case, more than 40% was placed in service during the last quarter of the year. So you have to look at so here's what you have to look at. First off, how much total personal property did we place in service during the year? In this case, it was $29,400 worth of personal property. Then we want to look at how much was placed in service during the last quarter. If that proportion is over 40%, then we have to use this mid-quarter convention. I'll go through this and I'll tell you the reason why they make your head explode like that. Yeah?
So would it just be the 22,000 that goes in mid-quarter, or all of it?
All of it.
Okay.
Then for all of your personal property during the year, you use the mid-quarter convention. Yeah.
And how did you go to 22,000?
The 22,000 is, so if this was purchased October 1st, so we've got our dates up here. Instead of May 4th, October, so January 6th, October 1st, December 1st. This was purchased in the last quarter of the year. Does that make sense? Okay, so that's where that's where the 22,000 comes from. Is just those items here. So this here, that's our numerator, that's our denominator to determine how much. All right. Does not include the basis of real property acquired. I'll come back to this. So, they use this very example here. So they changed this 20,000 to, they changed the date on when that was purchased, okay? So, with the mid-quarter convention, that means that we are going to place each item that we purchased in service. When do you think we place it into service? So,
November 15th.
So this one would be November 15th, the middle of the quarter in which it was purchased. October 1st would also be November 15th. This one though would be what June is, so May 15th. So for example, let me just write out the quarters here. So we got the rule down, right, as to when we use this. It's when we gotta total up all of the assets, all of the personal property assets placed in service during the year, and then we total up all of the personal property assets placed in service in the last quarter of the year. If the proportion of those is more than 40%, that's when we have to use the mid-quarter convention. So mid-quarter, I guess hopefully you guys can see this. So first quarter, so placed in service and depreciation start. So we got 2 dates here. So first, second, third, and fourth quarters. Okay? The first quarter, if we placed it in service from January 1st through March 31st, we're gonna start depreciating it. What's the middle of this quarter? February 15th. Second quarter, April 1st through June 30th. We're gonna start depreciating it May 15th. July 1st through September 30th. We're gonna start depreciating it August 15th. And then last but not least, October 1st through December 31st, November 15th. Okay? So we kind of have a two-step process here. We've got to figure out, okay, which one do we use, half year or mid-quarter? And again, we're only basing it on personal property purchased. So if we pass that 40% threshold of property purchased during the last quarter, then we have to use this mid-quarter convention. If we don't, if it's 39%, then we can use the half-year convention, and all of our personal property starts to be depreciated on July 1st. Now the reason behind this is, what it does is it prevents businesses from buying all of their property in December 31st, and then getting a half-year depreciation on it. Because, I mean, that would be pretty cool, right? You buy all of that equipment, and then say you buy $100,000 worth of equipment, and on December 31st, you expense it. You probably even borrowed, so you're not even out the cash. But in that year, then you get to take half a year of depreciation, even though you bought it on December 31st. So it helps to mitigate that abuse of taking advantage of the timing. Does that make sense? If you think about it, like if we didn't have this, and let's say during this quarter, we purchased $1,000, another 1,000, another 1,000, 100,000. If we did not have that 40% threshold, that 40% test, we would, all of these items, $103,000 would start depreciating July 1st. That means we get, let's say this is 5-year property, all of it's 5-year property, because that's easy enough to, and we're using, if we're using straight line, I'm pretending with straight line, 103 divided by 5, I don't know what that is every year, so 20, 22, what? 21, 20, sorry, 2667? 2,600, okay, so this would be our depreciation deduction, each year, and we'd get to take then in that first year, half of that, $10,000. Well, because we purchased this in the last quarter of the year, now we're gonna have to start depreciating this November 15th. And this one, August 15th, May 15th, and February 15th. That means this big $100,000 chunk, we're only gonna get a month and a half of depreciation out of it.
This one is big difference, because that's what I don't understand. If you purchase for maybe on March 15, it's supposed to come back for February 15 to be. So,
But I mean, it's easy in that you've only got certain dates that you use. Now, and the charts that we're gonna look at take all of this into consideration.
yeah, because that's what I don't understand. The date is not the same, because you purchase something today and then can go back and then can make a.
You get depreciation for that, yeah. The counter to that is that if you say you get rid of it, in the year that you get rid of it, I don't know, at the end of that period, now you only get to depreciate it through the middle of that period. It evens out. It does even out, okay? And like I said, the tables that we're gonna look at take this into consideration. They take it into and remember, this is only this is the first year. Next year, 12 months for all of it, for each intervening year. Now, the year that we sell it, we have to use the same convention that we used in the year that we purchased it. That does not mean that this stops depreciating November 15th, though. If we sold it in the first quarter of a year, then we're gonna stop depreciating it in the middle of that quarter. Okay? So, first year, last year is when all of this stuff kicks in. All of the intervening years, it's a full 12 months. The last year gets a little tricky, and I'll show you that, because the tables give you the depreciation for the first year. They don't give you the depreciation for the last year, because the tables don't know when you disposed of the asset, right? The tables assume you own it for the entire year during that year, and that's usually not the case. So we do have to do some calculations in that last year. Okay, so again, mid-month, we're gonna start depreciating it in the middle of the month that we purchased it. We're gonna stop depreciating it in the middle of the month that we sell it or get rid of it, and it's only for real property. Super simple there, right? Personal property, probably the best thing to do when we're talking about, am I gonna use the half year, am I gonna use the mid-quarter? First, test to see if you have to use the mid-quarter, okay? See if the first calculation you should do is, okay, did I place more than 40% of my property in service during the last quarter? If I didn't, you don't have to do any of this stuff. Just start depreciating it all July 1st, right? Which is easy. If you didn't, though, if you did place it in service during the last quarter, that's when you're gonna have to get into this mid-quarter convention, okay? I know, like I said, it's a foreign concept. Logically, it doesn't really make sense, but I mean, I think the theory behind it is to cut down on, to make it more standardized, to cut down on opportunities for fraud as well. All of these, as complicated as the tax code is, there are two reasons for it. One is special interests, right? Everybody's got their pet projects, everybody's got their industry that's donating all kinds of campaign money to them, and so they're gonna give them preferential treatment and try and stick things into the tax bills, right? The other is fraud, to try and mitigate, because people come up with all sorts of ways to cheat the system, and then they've gotta put those restrictions in to minimize that. So those are the two main reasons why we've got such a complex tax system. Okay, so as I had mentioned, although I'm gonna go ahead and read through this. So regardless of the convention required, the property is subject to the same convention in the year of disposal. So that's, like I said, if we used mid-quarter when we bought it, we owned it for 5 years, we sold it during the 6th year. In that 6th year, we're gonna look at when we sold it, when we got rid of it, and stopped depreciating it in the middle of the quarter in which we disposed of it. For example, if a 7-year maker's asset disposed of in year 3, half a year of depreciation is taken on the asset regardless of whether the date of disposal was in January or December. Likewise, mid-quarter assets receive half a quarter of depreciation, mid-month receive half a month of depreciation. All right, this kind of explains why we cannot, the IRS cannot build into the tables the last year of depreciation, why we've got to do a calculation. So you'll see when we look at the tables, there is a table in there for, so for each of the asset class lives, there's a table. And then we've got a table for half-year convention. We've got 4 tables for mid-quarter convention, because we've got 4 months. And then we've got tables which show each of the months for 27.5-year and 39-year property. And we'll go through those and I'll show you how those are used. Okay? So let's look at this example here. We've got Emily purchased a business computer system November 3rd, 2020. Computer was subject to the mid-quarter. Now, if that's all he purchased during the year, that means more than 40% of his assets were purchased in the last quarter. So they would start depreciating that computer November 15th in the year of purchase. The computer was subject to the mid-quarter convention. More than 40% total asset purchases occurred. He sold the computer on March 5th in 2022. So 2020, he got a month and a half worth of depreciation expense. In 2021, he got full 12 months worth of depreciation expense. In 2022, he sold it March 5th. That means that he's gonna stop depreciating it February 15th, because it's the middle of the quarter that he purchased it. So he again would get a month and a half of depreciation, okay? 1/2 of the first quarter, or 1.5 over 12. So, oh, it's a sheet, okay. Sold it, if she sold it December 2022, then she would get 10.5 months of depreciation that last year, because she's gonna stop it in the middle of the quarter that she sells it. Questions? Okay. Are we having fun yet?